All right. Welcome back, everybody, to another episode of Magic Monday, the show where we draw lines and make money. It's a working tagline. I'm still working on that. Got some kinks to work out here. I'm off center in the camera, too. How's everybody doing? Shout out Marty, Tunsky, Insidious, Ben. What's up, guys? Good to have you in chat. What's up, Matt? Got a banger of a show here today for you guys. Lots to talk about. There's an echo? Oh, no. Is that better? Uh-oh. Forgot to turn the music off, huh? Is it good? We good? Okay. Sorry about that. All right. That's cool. I'm gonna lose all of the new viewers in the first 20 seconds of the episode. That's fun. What's up, D-Koch? What's up, Pat? How you guys doing? Feech. Doc in the chat. How's it going, buddy? Good to see you guys. Before we get started, quick housekeeping items. Like the stream, subscribe to the YouTube channel, and be sure to check out the free Magic Lines Discord at the link in the description below. It's a party in there. Making money, having good times. Maybe someday I will be able to get my own producer, so this isn't such a technical shit show. All right, let's jump right into things. Today I want to talk about metals, so hot right now. Not just metals though, because I think metals are a part of a larger trade I want to talk about. A lot of you guys come from crypto, and being in crypto, you're sort of used to this idea of the dollar being toilet paper. And I think for most of our lives, it's been kind of true, but like not really. Like the dollar's actually done pretty well, all things considered, since the great financial crisis. Up until recently, though, when I think the dam is finally breaking. I think the dollar is basically about to go into full free fall here. I think this thing is basically going to the lows on the chart at some point. I don't know when exactly that will be. but the dollar is going down, and this one theme basically rules everything that you're trying to do in your portfolio today, right? Excuse me, I still have music playing here in the background on my end, and I don't like it. Okay, there we go. Okay. So I think we can all agree at this point that Bitcoin is not a good dollar hedge. It just goes down. It's not a dollar hedge. Maybe it will be someday. It's not right now, right? So we're going to talk about what I'm doing in my portfolio, what you can do in your portfolio, both in sort of like a long-term portfolio allocation slash also trading perspective, how to take advantage of and or hedge against the dollar decline, which is, I think, about to accelerate. So what is happening here? Basically, we're living through a period where the dollar is being structurally diluted. And when money weakens, the entire investment game changes, the trading game changes. If you've been following me, you know I used to spend all my time trading the magic internet money, and now I trade a lot of shiny rocks. Some rocks, not so shiny. The basic idea here is that when the government runs persistent deficits, when debt levels grow faster than productivity, and when policymakers can't tolerate recessions, they eventually choose inflation over austerity, right? They just allow the value of money to slowly decline into oblivion, and cash becomes the worst long-term asset because it just quietly, or lately not so quietly, loses purchasing power. But the goal here, in my mind, is not to necessarily short the dollar. It's to think about how to completely redo our portfolio to own the things that reprice upwards when money loses credibility, right? And that's where real assets come in. Now, if you're like me, when you grew up, they told you to buy a portfolio of 60% stocks and 40% bonds. And that eventually, I think, morphed into the AI slash crypto, the tech stock crypto portfolio for us millennials and some of you Zoomers out there, because we realized that owning bonds is fucking stupid and a sure path to poverty. But now I think some of us are still stuck in the tech slash crypto mindset, and we're maybe missing out on an enormous trade that is happening right now. So we're going to talk about how to get involved in that. First, I want to talk about all of these sort of like main sectors that are kind of involved in this trade. The first one is your precious metals, right? So prime precious metal, gold. Gold is it's just turbo mooning. I mean, this is incredible. It's just up only. We hit 5K today. We had some additional Trump tariff drama over the weekend, I think, with Canada, and we gapped open yesterday. Futures open. I don't really see any end in sight to this. I'm kind of the mindset that this is just going to $20,000. I don't know how long it's going to take exactly, but not something I want to fade, right? So gold is the primary thing in your precious metals bucket. It's a hedge against policy mistakes. It rises when trust in institutions fall. We've got both of those things right now. The world order is crumbling. The old world order, there are basically like monetary mistakes being made left and right. Fiat currency is going to zero. You know all the things. Easiest way to get involved in this, if you just want exposure in your portfolio, is GLD, the Spider Shares ETF. Yes, like you probably should own some actual spot gold, because I get it. If the shit hits the fan, like this might just be paper gold and you might not get anything at the end of the day, or you might take like a huge haircut on your GLD holdings. I'm more of like a trader. I'm kind of going in and out of markets. So this doesn't bother me quite as much. But I do own some physical gold now, and most of my portfolio exposure, however, is in the form of GLD or gold futures. Your next option with gold and with a lot of these producers we're going to talk about is to get access to miners. Now you can buy individual miner names, or you can buy GDX, which we have been in the Magic Lines Discord since $80. We're up at like 40% on this trade now, and like barely a month. I mean, things are accelerating. I mean, you could see on GDX, we basically have this very, very large high time frame consolidation that we just broke out of, right? And when I do targets for this stuff, like a very basic target might be like a 1-to-1 of the range that you just broke out of. So that would take us to about 121 as a first target, but your 161 fib is going to be way up here, like 160 or so. And this thing can go to like a 2x, a 4x, right? $285. I don't know where this exactly ends, but it just broke out like 3 weeks ago. We've got a very long consolidation here. I mean, all the data we have here is 7,000 days. What is that, like 20 years? So 2 months into a 20-year breakout. Fun stuff. So yeah, GDX, GLD for your gold. Got some other picks I'll show later for some kind of more long tail fun stuff. But for now, just trying to give you guys an overview of what you need to have. After gold in our precious metals bucket, we've of course got silver, which is just absolutely fucking hilarious. Oh man. I don't know. What do you want me to say about this chart? It's going parabolic. I feel like it's probably due for a pullback at some point. That being said, I did buy more silver last week on Tuesday, I think. So it's already up. It's already up like 25%. With a chart like this, you know, if you don't own any, you kind of just have to bite the bullet and buy it. You got to buy a little bit, whether that's 10% or 20% or 30% or whatever. You got to get the exposure. And then you just got to set the cash aside to buy on pullbacks. Because somewhere out there, there's a guy who saw this move here and was like, nah, that's a pretty steep move. I'm going to wait for a pullback. Oh, shit. Oh, God. Oh, God. Oh, God, no. All right. So that's your risk there. Silver miners. What is the ticker on silver miner ETF? I think it's SIL. Yeah. So silver miners ETF also doing pretty good. I actually think the silver miners are super interesting. So shout out to, I think it was Decot, right? Who talked to me about this in the Discord this morning. I think so. Yeah. So I've owned a little bit of silver miners for a bit, just like a small chunk of my silver allocation. This is a really interesting chart because, again, we have this very fresh breakout from a massive 15-year or so consolidation. So I think this is probably just getting started. I know people are also, this is also a log chart, by the way. So there's a non-log chart. You can kind of see the scale of what we're talking about a little better here. I know everybody's starting to talk about metals now, and now that I'm doing a show on it, it's probably a sign that there's at least some sort of like retail induced local top like eminent. But like that being said, this is not the type of move that just gets started and then dies, I don't think. Like we can look to crypto to see what some of we've never had a consolidation this long in crypto, but we're used to these bear market sideways moves that result in very large breakouts to the upside. This is probably better expressed in some altcoin charts that I don't have handy, but I don't see a reason to fade this right now. Like it's still 20% down if we retest the zone, which is probably a high probability, but like I would assume that that's like a hand over fist buy. The really interesting chart is they stopped offering futures on silver for mid-February. Really? Is that true? That's crazy if true. So interesting chart is silver miners versus. So actually, I don't want to do this. I want to do silver miners. Where am I? Silver miners divided by silver price. You can see that miners have actually been like a pretty bad underperformer relative to the price of silver. So it's been good that I haven't owned these in any real size versus like actual spot silver. That being said, I am wondering if we're going to put in some sort of double bottom here. There's no confirmation on this yet, but if we end up kind of sweeping this range low, testing it, and then back inside the range, I mean, this could be a ripper of a move. This could. I wonder if this is kind of like the kind of signal we get in crypto, where Bitcoin pumps and then like all your shit coins start ripping. So silver miners, kind of the shit coins of silver. This is 170% to the range highs relative to the silver price, just to give you some idea of the magnitude of that move. But you can see on the low time frame right now, this is definitely a bit of a knife catch. So on a relative strength basis, I don't know that you have to be rushing into silver miners at the moment, but it's an interesting trade to keep an eye out for. And again, like I would want to see us kind of sweep something out and then back inside this range, and then look for a move to the mid range or to the range high, which would be pretty sexy. Next group of stuff in my bucket, we've got our platinum group metals, which I think are really interesting. One of the more overlooked areas in commodities. They are definitely under-owned relative to stuff like gold or even silver, which is pretty commonplace. Lots of tech applications, auto, hydrogen tech, general industry. A couple interesting tickers here. I've got PLG, Platinum Group Metals. You see a lot of commonalities in all these charts, but this looks really sexy to me. This looks like a very obvious accumulation bottom. You got your V, you got your V retest, and then you get your rounded bottom here. This is a long ways up to the highs. This is 14,000% to the prior all-time high from 2007. Not saying that we're going to go there, but like we were there at one point. Even this range here, which is kind of the main thing of note to me right now. And again, this looks a little weird because it's a log chart. So If I draw that in a regular chart, you can kind of see the scale of this. Even just to the mid-range of this little range, this is a 500%-ish move. To just the range high here, that's 1,000%. So 5x, 10x. Yes, Pat, only 14,000%. I know, lame. So yeah, I think this is worth some at least small allocation, right? For that asymmetry. Pretty sexy. Also got an eye on. Actually, before we do that, let me see if I can get some better signals here on a yearly chart. Yeah, quarterly, monthly. Yeah, it looks a little cleaner on the quarterly charts here. So previous year's high, 336 or so. We've got a monthly close coming up in a few days. So if we close the monthly above the prior yearly high, 336, I mean that's just go time. Sure, it can dip, but like that's basically go time for me. So definitely on the lookout for that. May as well set an alert here while I'm at it. So that's a cool setup to look for. Other platinum thing I got my eye on. Sibanye Stillwater. I'm not sure how to even pronounce this. SBSW. Now, I don't think I need to say much about this chart. So looking for that monthly close above $20 or so. And then you've got a breakout potentially of a very nice little range here. This is 2013 to 2026, so a 13-year accumulation range. I have to contain myself here. This looks pretty hot. Definitely looks pretty hot. Next up, we got energy. The backbone of everything, the main input into the entire global commodity. I tend to be quite bullish on oil here. This is funny. This is the COVID when oil went negative. Good times. It's actually just been basing and consolidating sideways here since 2022. So I feel like it's pretty inevitable that this just rips to the upside at some point in the near future. I'm playing oil mainly through energy stocks like Valero, which I like. Valero basically getting ready for a little blue sky breakout here. There is an annoying little gap below us, so I think this gap probably does get filled, or at least partially tested. Super interesting buy area here down below 177 or so. And I think if you wanted to turn this into a trade, right, you could probably just size this to put a stop below the October low around 155 or so, where we swept out liquidity, and then give yourself an opportunity to position for like a huge breakout trade. So we're long Valero. We're also long ExxonMobil, which I think looks a little better than Valero. So this has been a nice trade thus far. Blue sky breakout. For all we know, this may never come back. Valero, Exxon, like that. You could also just do something like XLE, which is basically the energy sector ETF. This looks pretty good too. It looks like it's about to just send with a nice little breakout. This is the type of price action where I would position before the breakout, right? You've got this range here. Had a little deviation to the upside of the range, swept out a bunch of liquidity, range lows, and then a very forceful move up towards the range highs. And now you're just accepting and consolidating here for multiple years, right? Had a nice little liquidity grab here in the summer. And as far as I'm concerned, like that's probably it. So I think this goes. I think it goes with a nice fat candle at some point. And yeah, I would be buying it here, aggressively positioning pre-breakout. After oil, we got uranium. The world wants clean energy, and it needs a fuck ton of it now with the AI boom. Your basic way to play uranium is with the uranium ETF, URA. Safe, easy, effective. This bottomed in 2019. I think this just goes up and to the right for a long time at this point. Pretty nice monthly setup here. If we get the close above the November high, so you get a monthly close above 54.70 or so, this becomes a nice monthly order block, right? So you can actually just frame a pretty aggressive trade at the low of the monthly order block and just take this up to wherever. So that's pretty nice. One of my favorites that we've been long in the Discord for a while is Energy Fuels, UU, a lot of U's. This thing to me looks like it's just going to go absolutely nuclear, pun intended, I guess. So we're liking that one. Other interesting plays here. What do I got here? Got CCJ, Chemico. That's a nice chart. That's what you want to see in a chart. Just up only, above all-time highs, blue sky breakout. I probably should own more of this than I currently do. Similar setup here. Love these setups on the monthly, right? You got your monthly pullback, forms the order block. When you close above it, this becomes a place you can frame a stop on a trade. You can just market buy at the monthly close. You can add on pullback, stop loss there, target, I don't know, infinity. Looks great. All right, after uranium, we got our industrial metals. Dr. Copper. Copper is so hot right now. There's one of our bullish zones. There's another one of our bullish zones. Blue sky breakout on copper. Copper is mooning at the moment. My favorite way to buy this, like for kind of like low mental energy people, CopX. This is your copper miners. This thing is like one of the most turbo bullish charts in all of anything. I mean, this was April tariff lows. We're now up 200%. Smooth. Basically just nothing in the form of pullbacks here. Just straight up. So like copper, we're getting a little downstream now. We're getting a little more niche. We're going to go into battery metals, lithium, high beta, more of a trade, riskier stuff. I like SGML, Sigma Lithium Corporation for this one. Shout out to my boy CVO Trades who turned me on to this. This is a pretty sexy chart because you have, from a TA perspective, your series of down close quarterly candles here. This just looks like an order block, close above, retest to the order block, and just looking for any sort of consolidation pullback. This looks really good. I would be surprised if we dipped below $9. It's possible. But I think this consolidates and just sort of breaks out. So I'm building a position in this currently, and I like range highs at a minimum. That is a smooth 218% from this level. Got some very nice liquidity here. Just smooth. Here, I'll draw it in curve form. It's a lot sexier. Yeah. Nice little liquidity curve here. I think this rips to the upside. So I got some. Next is a segment I don't hear a lot of people talking about, and this is agricultural inputs, mainly fertilizer, nitrogen, potash, phosphate. Fertilizer is super interesting because if you're a farmer, you can always skip buying a new tractor if the economy takes a downturn. But you can't skimp out on the fertilizer. Like, fertilizer is this just like unavoidable input to the most important thing on planet Earth, food. Food is pretty recession proof. And again, it's rooted in real stuff, real commodities, stuff that like we can't print. One of my favorite ways to play this, which is also hilarious, is the ETF Moo. How funny is that? Moo. Moo is the VanEck Agribusiness ETF. Kind of gives you a good broad overview of agriculture plays. You can see we've just had a nice little monthly expansion candle here. Looks like it wants higher. Pretty clean chart, honestly, in the high time frame. Just got some nice, clean market structure, higher highs, higher lows. This is probably just gonna go to all-time highs. Looks pretty sexy. There's some more niche plays, company specific. MOS, the Mosaic Company. I would say this is a breaker. This is a good spot to be positioning long on the high time frame. We get Nutrien, NTR. Similar structure to all these charts. It's a similar structure to Moo. Higher high, higher low, higher high, higher low, in the process of perhaps going back up to all-time highs. But currently I'm just kind of focused on Moo because I wanted something to buy and just forget about and not expend too much energy into. Not really a trade for me. Again, just something I added to my longer term portfolio to, try to hedge against some of the crazy shiz happening in the world today. And lastly here, for the final component of our dollar down real things bucket, we got commodity infrastructure. So these are companies that are basically kind of the toll booths, if you will, of the commodity plays. So these are companies that do things like pipeline infrastructure, that sort of stuff. A few interesting tickers here. First one is KMI, Kinder Morgan. This is a hot looking chart. Bull flag, anybody? I really like it. You got expansion, and then you got a year plus of sideways consolidation. Target on the chart is $44. That is a smooth 54% from here. We like that. ET, Energy Transfer LP. Similar setup, similar target. I like this one to $35 liquidity. That is a nice 96% from here. We like that. And then the last one in this bucket that I got, EPD, Enterprise Products Partners. Again, similar looking chart. They're all correlated, same kind of general idea. Maybe you're just reducing some single name risk, idiosyncratic risk by just buying a few in the bucket. A modest 38% to the highs from here, but I imagine it will just continue to the upside. So one of you guys dropped a ticker, SILJ. Oh, Silver Junior Miners. That sounds sexy. I've never looked at that. This is like ultra degen silver. Is that Pat? Oh, hello. Hello. All right, that looks hot. It's a nice breakout. That's pretty sexy, Pat. Thank you. Yeah, this is a good one to just like hot sauce a little bit on, sprinkle a little bit on. If you have a pullback, buy a little more, pull back, buy a little more. Oh, this is a CP Ledger pick? Nice. Yeah, I want to give a shout out to CP Ledger in the Magic Lines Discord. He dropped a few cool kind of like more out there tickers. I gave you guys some mostly kind of basic bitch stuff just to set it and forget it in your portfolio. A couple individual names in this bucket here, but CP Ledger dropped some fun tickers. So I'm gonna go through some of these here. First ticker, courtesy of CP Ledger on the Discord, is Load. Comstock Inc. This one I thought was really interesting. This is a company that does solar panel silver recycling. That's a nice blend of two buzzwords there. Chart's pretty interesting. It looks like a Adam and Eve bottom, right? There's your V and there's your curve. You got an inverted head and shoulders here. It looks pretty sexy. Also worth noting, this is a log chart. So again, these targets are like astronomical. I don't know if they're, I don't even know how this is real life, if there's some like weird split dynamics going on here. But just for some context, the highest point on this chart is 18 million% to the range highs. So I don't know. I don't know what's going on there. The highest price this traded at was apparently $729,000, and we're trading at $3 right now, $4. So that's interesting. Some asymmetry here. I like it. Even to this 2021 high, which was not too long ago, that is a nice move. That is 2,200%. See, guys, you don't need to trade shit coins. You don't need to trade dog with hat and cat with hat and frog with hat and elephant with hat. You can get 18 million% on a on a solar panel recycler. So yeah, Load, LODE. That'll be a fun one to track. Hopefully it does something. Next on the ledger list, we got Aya, which is a big silver mine developer with ops in Morocco, apparently. That's a good chart. That's a good chart. That's what you want to see in a chart. It's actually impressive how long this chart has been very bullish for, actually. This chart's been bullish for longer than silver itself has been bullish, which is fascinating. But yeah, it's very clean. Very clean market structure. up only. Good candidate to just buy some and kind of DCA in and or just add on severe pullbacks. Looks pretty sexy. Thank you, Ledger. This is his favorite silver miner. Kur mining? Kur? I don't know how to pronounce that. Is that French? Another interesting chart when you zoom out. Basically just viewing this as a big old range. Failure to close inside. So mid-range target right there. Again, you can see that a little more symmetrically when I take the log chart off. This is interesting. I mean, this is basically a 9,000 day sideways accumulation we're basing from. We bottomed first in 2000, so 26 years of sideways. A guy can dream. That is 540% to the mid-range. May the lines be with us. Looks like Ledger also really likes royalty companies, which I never really considered as a play until he suggested them. I think a royalty company basically provides capital to developers, producers in exchange for some sort of stream of the profits. So I don't think they actually own any of the physical mines or stuff like that. Kind of an interesting play. UROY, uranium royalty. Looking good. I would say looks similar to their uranium chart. Again, we're looking for monthly close above 478 on this bad boy. Once per bar close. Cool. So I'm going to add that alert. By the way, pretty easy to do these alerts in TradingView. If you guys aren't familiar with it, you draw your line, Alt A, bring up the alert. And then I like to use the crossing up once per bar close with the time frame of the bar I'm looking at. So we don't get the wick there. We get the confirmation of the close. Yes, that's right, Pat. They benefit from the miners without all of the operational risk. Kind of an interesting play. So there's your uranium royalties. You got your gold royalties, GROY. GROY. Another interesting chart. I wouldn't say this is like a TA guy's dream, this chart, but it looks like it's going up. It's going up on the monthly chart with no pullbacks. So looks strong. WPM, Wheaton Precious Metals Group. This is your silver royalties mainly. Holy balls. Damn, Ledger. I hope you've been owning these for a while. Give us an invite on your yacht, please. All right. That's sexy. Again, not sure how to get an entry on something like this for as a trader, but hell of a chart there. All right, thanks, buddy. I appreciate the alpha. Those are some interesting charts. Got them in my notes here. I'm gonna add them to the old Magic portfolio later on. All right, let's move on from the land of metals. What else did I want to talk about here? Yeah. Let's talk about crypto for a bit. Pains me to do so, but we got to talk about it. I saw an interesting post on my timeline the other day about how crypto is not cool anymore. And yeah, I think that sums it up. The kids don't think we're cool. We don't do anything useful. Other stuff goes up more. It's a rough time to be alive. Rough time to be alive in crypto land. Um, so Bitcoin, yeah, my thoughts that I've been telling you guys for Bitcoin for a while have not changed. Again, like I'm fairly certain we're going to 80.5. I think the ultimate target for this leg is 74. Um, you saw on the Magic live stream a few weeks ago, I said we're probably going to reject off this monthly fair value gap. Everybody's bull posting on Twitter, but you just had a little, what I believe is sort of like power of three, accumulation, manipulation, distribution fractal. There's your accumulation, and there's your order block that creates the up move out of the range into the point of interest. We then close below, validating this as a breaker. You can see the textbook underside retest of the breaker, and then we dump over the weekend. We're probably going to leave behind a bearish fair value gap here today. And depending on how the daily candle shakes out today, we could come up and run Monday's high into this fair value gap, like 88.8 or so, and then resume the down move. I'm open to the idea maybe that we take out some of this range extreme liquidity around like 83.4. Maybe it kind of does something like that to open February and then dumps. I'm not sure about the exact path here. We got into this trade in the Discord up here around 95, 96K or something. So very in the green. I did unfortunately take some size off over the weekend, so that sucks. But you know, you win some, you lose some. Entry is pretty good. There's a pretty fat wick on the February candle here, so I don't know that it's just going to immediately expand down. Sometimes when you get these long wick candles, the next month has to open, and then you move up for a little bit, and then you dump. So probably my base case. I do still think there's going to be probably like a really nice trade from this area here. Probably a good bounce. Be pretty insane if we didn't bounce from here. I think that we are probably, I've been thinking about where this is going to bottom out. And if I were a betting man, and I am a betting man, I actually think this level here looks really nice. 31K. It's a pretty sexy level. This would cause a lot of pain. A lot of pain, a lot of people, and a lot of pain. I don't have to go that deep. There's a little demand zone here that we never tagged with some decent liquidity from the ETF, post ETF shenanigans. The ETF launch low is at the bottom of the zone, 38K. I would be kind of surprised if we just take 74K and go higher. I guess it wouldn't be the most shocking thing in the world to me, but like, again, like I don't see the point in owning this when the upside case is something that could be achieved by buying equities with like a lower volatility profile. And the downside case is like still another 65% down from here. It just doesn't look good. I think we broke the meme trend line too. Not the meme trend line, no. Sad. You hate to see it. So yeah, Bitcoin looks turbo fucked. The altcoins look turbo fucked. I did take a new short position today in the Discord. We shorted World Liberty Fi, the orange man's coin. I think this looks pretty bad. Looks pretty clean to me. I mean, basically entered around here, 15 and a half, 16 cents or so. I think this is going to move down and take out all this liquidity here to 10 cents or so, and probably trade towards the 10-10 lows and maybe zero at one point. I don't know. Not something I want to be holding for the long haul in a perp short. And if you do short this, like, use stop losses, because you are one crime tweet away from getting liquidated, as is the risk in this stuff. But yeah, this looks like a pretty clean range to me on the lower time frame here. You've got a bunch of supply on the left side of the chart here, which is probably going to push price back down. You've got what seems to be a really nice little accumulation range here. You get one deviation, two deviation, a break of structure, and then a very clean retest of the key supply from that second deviation. So I think this is toast. Maybe my stop loss above today's high is a little sketch, but like I would be surprised if this goes back over 18 cents. Nothing, really surprises me trading crypto. But yeah, I like this from lower. We are still short Ethereum, which does look like it could bounce. Chart is a bit of a mess right now. We took a bunch of liquidity here. We've reclaimed this range, so anything's possible in the lower time frame right now. Higher time frame, I mean, this just looks absolutely cooked as all hell to me. And the idea that this is going to go back up without at least like taking December's low is like kind of crazy to me. I would be quite mind blown and somewhat poor if that happened, but such is life. One thing I like to use a lot to give you guys some additional alpha here is the USDT dominance chart. I drew this up months ago, actually. I hadn't looked at the chart in a bit. And I think I drew this up in the beginning of the summer or something. So when dominance goes up, crypto is usually dumping. When dominance goes down, crypto is usually pumping. This is your range high. This is your range low. I've labeled this mental illness alley, which I think is a apt description of what it's been like to be in crypto if you haven't been exclusively in Bitcoin or like one or two altcoins for, I don't know, roughly the last 3 years. And the reason this is mental illness alley is because it's the mid-range. It's just chop. It's just hope and desolation, hope and desolation. It just back and forth, back and forth. So we need to go to some sort of extreme here. This appears to be breaking out to me, i.e. coins down. I think once this starts pumping up here to this like 8.25% or so level, maybe like 8.5%, that to me is the opportunity zone. That is when I think it's interesting to maybe start looking for some stuff that doesn't completely suck. And then likewise, if we come back down here to this 3.5% range someday, that would be the GTFO area. But yeah, altcoins have sucked because they haven't really gone down quite enough to be like screaming buys that are going to give you like a 30x. But they have just chopped around in a way where like everybody's just getting completely fucked up and they're basically just bleeding for a long time. So worst of both worlds here. Zooming in, looking at the candles. I don't know if you guys can see this, but monthly expansion here on the way up. There's a fair value gap here. that pump to start the year, I think, was just a retest of the monthly imbalance. This wants higher. Like, I'm going to be very surprised if this doesn't go higher. Where's the very first place this could stop? Probably like 7.8%. This is the candle that caused this fair value gap here. So maybe that can be a first sign of relief. But I do not want to touch altcoins until they are deep in this green area. And even then, most of this stuff is just absolute trash, and it's going to absolute zero. On a happy note, in altcoin land, as you guys know, I think I've talked about it. The one coin, like basically the only coin I'm really interested in size right now, is Hyperliquid. I like Hyperliquid a lot. Bought it down here in the spring at 12 bucks, sold most of it in the high 40s, had a nice little gain, still got a little bag. I have been buying this again. It's been an open question in my mind how deep this goes. Ideally, it would come all the way back down here to the origin of the move, maybe all the way back down to 10 bucks or so if things get really, really bloody. But I'm open to the idea that this could bottom at the mid-range where we are currently already trading. Way too early to make this call, but this is a possible area where we could be bottoming out. So for people who want like kind of like a low brain power strategy, buy some here, buy some here, wait, hopefully make money. One thing that's been interesting to me is the hype Bitcoin chart. Like, crypto's been going down since, early fall, and you can see that hype has been just getting killed versus Bitcoin since early fall. And it kind of makes sense because as crypto prices go down, like, you initially have some volatility when stuff blows up, so trading volume is high. But after 1010, right, so many people died and got blown out that I think in addition to, the volatility going down, there just hasn't been as much volume in the space because the space has been completely depressed, right? And so it's made sense that hype USD has gone down. It's made sense that hype has been kind of correlated with Bitcoin and it's gone down. But as of late, if you guys have been paying attention, Hyperliquid has added a lot of non-crypto instruments to the platform. You can trade like equity perps like Tesla. You can trade commodities perps like silver. And I think that this trend is only going to continue. And I think the volume is going to start increasing with like the TradFi instruments as a share of crypto instruments. And I do think there's going to be a point in the not so distant future where the trading volume on Hyperliquid for TradFi assets exceeds the trading volume on Hyperliquid for crypto assets. And when we get to that point, or when the market realizes that that point is inevitable and coming around the corner, I think you're going to see a decoupling of Hyperliquid from the crypto market. And I think it'll start trading as its own sort of like idiosyncratic asset class, right? Not too much in this space right now. There's hype, and then I think there's lighter. But this is the only thing that makes sense with crypto right now. The infrastructure to do instantaneous on-chain settlement and to facilitate the trading of assets, to facilitate leverage. This is all really cool stuff. And it's stuff that is provably generating revenue in crypto. So it makes sense to me that this is going to catch a bid. I have way more confidence in this point that Hyperliquid does a 5x from here than I have that Bitcoin does a 5x from here. And at this point in time, I think I own now more Hyperliquid than Bitcoin. And I think that's probably just going to keep going up only. It's a really interesting spot in the chart right now, the hype BTC pair. This is a high time frame breaker. Got a very clean retest of the mid range at this level last week. And today you've been seeing some very, very strong movement in hype relative to Bitcoin. So are we witnessing the end of the correlation right now? Too soon to tell, but very interesting. I personally own most of my hype now via PER, which is Hyperliquid Strategies on the NASDAQ. Just bought a fat new bag of this morning. This looks pretty good to me, honestly. Not a lot of data on the chart, but I like what I'm seeing here. I like the Hype USD chart. I like the Bitcoin pair chart. It looks good to me. Definitely a little early to call a bottom on Hype USD, but it's a non-zero probability, right? Like the bull case, like if I were to make you a bull case for hype from here, is I could probably say, okay, here's your range high, here's your range low. This is your point of interest. This is the mid-range of that high time frame zone around 22. You get your range high, you get your range low, deviate the range high, trap longs, come back down to range lows, deviate range lows, come back, retest the order block. Now, this period of sideways relative to this right here is like a little lower on sort of like the time ratio than I would like to like have full confidence that this is like a bottom. But like mechanically, this is kind of how bottoms are formed. You form a range about a high time frame point of interest. You go sideways for a bit. You ideally deviate the side of the range that you want to break out into ultimately first, giving further fuel to the upside here, right? You consolidate, you form one tap of the range lows, a deviation, and then you form some other second tap, either by running the range low or by retesting an order block inside this consolidation that forms the deviation, which we've done here. So it is not impossible that hype has generationally bottomed. Am I going to make that call at this point? No, that would be stupid, but like it's worth allocating to. Like if you don't have any, the probability is not zero. It's far from zero, I think. There's not 100% chance that you get to buy this lower. You probably will, but like maybe not. Does anybody know why this is pumping so hard today? Was there some news I missed? If you got any insights, let me know in the chat. I'm curious if they did something. Yes, I am being a degenerate and drinking cherry Coke at 11 in the morning. Because fuck it. It's a party. So, yeah. Bullish hype. You should be buying here, IMO, and you should be buying here if you get some. I think if you have like a very long time horizon, buy half here right now and then buy the other half in this box. And if right now ends up being the bottom and then we pump, then you just look for some sort of pullback and then deploy the rest there, and then you're good. Marty, I assumed it was just the HIP3 volume and momentum. I don't know. Possible. I'll look into it after the stream. I would have looked into it before the stream if I was a responsible streamer, but I'm not. I was too busy being balls deep in metals, you know? By the way, if you guys have any requests, any questions, drop them in the chat. I will get to them at the end of the stream. Got a couple more things to talk about here. A couple trades I wanted to talk to you about that I put on recently. One of them I think is pretty sexy. We put this on in Magic Lines Premium, but I will share it with you guys here because I like to give you I like to give you some alpha. ARCG, the Genomic Revolution ETF. This is a very sexy chart to me. So this is ARC. This is Kathy Wood. This is just like a basket of companies that are doing genomics, which I think is a really, really interesting field, right? One of the more interesting fields that exists out there. It's super, super fascinating to think about what the future would hold here. This is basically just a classic meme coin Burj Khalifa chart, just straight up and straight down, complete annihilation. But in my opinion, this is based enough. This has gone sideways for about 3-4 years now. So sufficient base. On the 12-month chart, like you can really kind of frame this out as one candle, right? So this 2020 expansion candle, we sweep the high of the candle, and then here we sweep the low of the candle. 1, 2, 3 taps of the range low. And on the weekly here, you can see we've got this nice little downtrend that we broke up from and retested. And now on the monthly, if all goes according to plan this month, actually we already closed above this. So we already closed above this this range here as well. So as far as I'm concerned, this is good to expand to the upside. And I've got a few targets for this. First target for me is $60, which is a smooth 83%. Then I like 66, 66, satanic, 103% to there. I like these little highs here. It's about 172%. And then my main TP on this trade is going to be this kind of extreme liquidity in this range, around $99. That's a smooth 200%. And I plan on leaving a runner in case this wants to go to all-time highs. I bought spot in this just for my long-term portfolio. Also took an options play. Did a risk reversal here. So I think I longed $50 calls or something for like 2 years. January 28 leaps. I think I went long 50 and short $26 puts or something like that. So risk reversal. So really like that as a trade. Hopefully works out, makes me look smart. Other thing I put on today, bit of a esoteric trade for most of you guys, but I trade this stuff sometimes. Shorted the Nikkei. It's kind of a shorter time frame move. Just looking for, I think, 49.6K on this. This is basically a way to play the dollar kind of blowing up, which would mean yen strengthening, which would mean unwinding of the carry trade to some extent, which would mean a sell down in Japanese risk, i.e. the Nikkei. So little portfolio hedge I have on there / trade, because this could also result in some US equities vol. If you wanted to tag along on that, I think you can. I trade futures, but I think you can do EWV. Not sure what the liquidity is like on this. It looks a little bit sparse, but ultra short Japan. Basically been down only, so don't hold this. But I like the Nikkei futures for sure. Okay. How you guys doing in there? Cool. Let me check my notes here. Make sure. Oh, Zoom. Let's look at Zoom. How's Zoom doing? Oh, yes. Oh, love to see it. It's happening. Yeah, I gave you guys this Zoom play on stream, combination of my magical lines, but inspired by also Citrini's Bullshit Jobs tech bullshit jobs basket, um, companies that have a lot of headcount that can be eviscerated via the basic capabilities of Chat GPT. This is a similar trade structure, honestly, to the ARC thing, which I think is just kind of like a similar setup for a lot of 2020 kind of meme stock things. It's a range. We took out the range low. I think we're going to move towards the range high. There's just a bunch of air in here. So I like this area here for the bulk of TPs, because this is the nearest kind of main point of supply. It is the mid-range here, as you can see. So sweep range lows, we move to the mid-range. This is a nice move to call it 325 or so, 250%. Feeling good. Feeling good about the trade. Other points of interest would be the range highs of this zone at 406, the extreme point of liquidity here on the monthly, 505, and then of course the range highs at 586. And this is a smooth 541% to the range highs. So I hope they give it to us. May the gods bless us. Think Clearly said, Jim Cramer just posted, I am a huge gold bug, but I am not a silver bug. If there were no sentimental value to it, I would try to cash in on family silver. This is getting ridiculous. Yeah, I mean, bullish. Honestly, the fact that the silver miners have performed so badly relative to silver still, it does feel to me like a sign that it might still be early. I hate saying that on a YouTube video that's gonna be sitting here forever and make me look like a fucking moron as I bull post the top. But it does feel like it's like kind of early still. Oh, that's Ledger. What's up, Ledger? It's a good username for you. I like that. It's fitting. Yeah, I know you feel like we are nowhere near the top, and I think there's a good argument for that. You know, there's a good argument for that. There are very, 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 very large pools of capital that are fundamentally underexposed to this stuff, and it's always nice to be a little minnow longing shit with like trillions of dollars of capital coming in behind you. Feels good. Yeah, crazy time to be alive. I mean, there's obviously that saying, there's always a bull market somewhere. And I know, like, as humans, like we are creatures of habit. We get into the idea that like we trade and buy particular things. We always look at those charts. We sometimes identify with those assets. This is particularly a problem in stuff like crypto, or is that there's this big cult community element to it. But like, it's cliche, but it's true. There is always a bull market somewhere, and we are living through one of the crazier bull markets I think that's ever happened, and we're possibly just at the beginning of it, right? There is a world where like fiat turns into such fucking toilet paper in the coming years. I mean, all of the writing is on the wall, and I think a lot of people have been lulled into a false sense of security because the gold heads like have been screaming about this for like literally decades at this point. And when it didn't happen after the GFC, I think that was a lot of people's like, oh, like, well, it's just not gonna happen. I don't know, there's something about MMT or the way the PhD economists run. We're just not gonna have that. It doesn't work. Deficits don't matter. Yada yada yada. But like, sometimes you just need like a particular spark. You just need a particular catalyst, and maybe that catalyst is happening now. Maybe there are multiple catalysts. We have this like overlay of the debt. We have the kind of reorganization of the global world order, of global trade, reshoring. Um, we've got some things happening now with AI. AI seems to be causing job displacement, right? Um, there's like starting to be a disconnect with the unemployment rate and the GDP growth, and all of these things kind of point to money printing. The president is a Republican, and he's basically like a New Deal socialist at this point. He's posting about like capping credit card rates. We're making 50-year mortgages. Like we're gonna give stimmy checks for the tariffs probably heading into the election. New Fed share. I mean, like the writing is on the wall, and yeah, things have been ripping and pullbacks happen. It's kind of, concerning that there has been no pullback thus far. But like we can look to crypto for models of this stuff, like how something like silver might operate in, past Bitcoin bull markets. There are pullbacks, right? And they are violent, right? And they tend to be of the 30 some odd percent magnitude, but like they happen in the context of up moves that go up 600-700%. So volatility is a two-way street. You can't get the massive gains without getting the massive drawdowns. Well, normally you can. I guess you can do that if you own gold. This was the biggest drawdown we had in gold, I think, here in the fall. 11%? Like, are you freaking kidding me? That was 11%, 10%, 8%. I mean, this is crazy, man. Like we're in a move of 150% from bottom to top, and we've basically only had like 10% pullbacks. Super crazy. Ledger, you're saying it was suppressed for decades. You talking about silver? The silver was suppressed for decades, or just everything, all the precious metals? I know that for years everybody's been bitching about like paper silver. Silver price is suppressed. It's all paper trades, and now there's this idea that there's actually this rush for the physical. There's this loss of the faith in the paper, and that's what's kind of like moving these markets in like a big way. Yeah, silver prices and gold prices. Um, it makes sense to me. It's similar to unwinds we see in other areas of it's kind of like a derivatives market, right? You have this underlying market that is larger in size than the actual spot market, and when the forces underlying the spot market start like dislocating from that like paper derivatives market, like crazy shit can happen in one direction. So maybe living through that right now for sure. Marty started paying attention to gold at 2,700. Should have went all in. Yeah, shoulda, woulda, coulda. I mean, but look, like with stuff like copper, with stuff like stuff like palladium, something like palladium, especially, right? Like this isn't even in. It's not even in price discovery yet, right? For all we know, this breaks out of range highs and goes to thousands of dollars, right? So these lower cap precious metals, again, I don't know, I view them as like the shit coins of the precious metals market, and the extreme move in gold, right, is just, I think, giving rise to similar dynamics that we see in crypto with the capital moving out the risk curve. um there's permission for people to buy these things. I think that nobody is allocated to like platinum, right? Nobody's allocated to palladium. Nobody's allocated to lithium. Nobody's allocated to copper. Like it's been like quite literally decades of this shit not performing. And so people have written it off. And now you have very, 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 very large pools of capital that need to completely redo their thinking. Like the average Joe on the street is still not owning any of this stuff in their portfolio. They're still in some, managed account that's just buying stocks and bonds. And so I do think that although there will probably be a nasty pullback in the near future, I do see a very good case that this trend is very, very early, right? Like this could just be like the internet bubble, right? You got the move up, you got the sell off, you got the death, and then up we go. Are these the same thing? Well, no, not exactly, because there's no cash flows in metals. There are cash flows in the companies that mine and produce the metals, though. So I guess maybe there are similarities. But if I go way back on the NASDAQ and what we went through, this looks a lot like this looks like a lot like the ARC and the Zoom charts. By the way, is this the genomics chart? Is this what genomics is about to look like? Please God, please God. Would be nice. But yeah, I mean, we could basically be like, here right now, just coming up, and then yeah, nasty pullback, but could be an entire investing paradigm shift that lasts for multiple decades, right? We are in the fourth turning. The world is being remade before our eyes, and it may very well look very, 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 very different a few years from now. And all of the rules that we followed as far as what to buy, what to invest in, what to avoid, like we may throw all those out the window. And this happens all the time. It's just like some of these economic cycles are so long that like entire generations of people, they just live through one cycle, and then there's just this generational belief that this is how markets work because this worked for my entire generation. But we see numerous examples where even in equities, like equities were generationally bad investments for multiple generations at various points in the future, even though for us, they're these things that just only go up in a straight line. And maybe that is what real things are going to be worth in the future. Stuff that can't be printed in the world of printed money, in the world of software, in the world of ones and zeros. Yeah. Ledger saying your company 401k won't even let you buy this stuff. Yeah, it's true. I mean, like, so early in a way, there very well may be a world where like it may be like even like 5 years from now, who knows how long it'll take, where there are just like I don't think there's any like systematic flows into this stuff in the same way that there is into the S&P 500 right now from people's like 401ks and stuff. And I don't know, like I feel like the large banks and money managers, if they're not already, have to be starting to like bang the drum on clients having this stuff in their portfolio. We're approaching the point now where people are looking at their yearly returns, and some managers who bought this stuff are destroying managers who didn't buy this stuff, and that's sort of like the first domino to fall in terms of like the mind share kind of shifting on this stuff. So yeah, TLDR, I think we're still early. I think there's still time. Volatility is a bitch. You will probably eat a drawdown. But I think if you can kind of like manage your capital properly, if you're good at trading, I think there's just a ton of opportunity here still in the land of metals anyway. And with that note, I think I'll wrap the stream up. That was a fun little hour and a half with you guys. Appreciate you joining me as always. That was a fun one today. Interesting time to be alive. A lot to think about. I love waking up in the morning, and I feel like every day I have like an entirely new thesis to wrap my mind around. And the Orange Man did something else, and it's just wild. I said years ago that the era of just easy mode investing is over, and that has definitely definitely been the case. So if you're not doing so, you got to take a little more active role in your finances and how you invest, and maybe think a little outside the box, go a little bit uh, out of your comfort zone, a little out of the risk curve. Not financial advice, obviously, but this is what I am doing personally, and it seems to be working so far. So I'll leave you guys with that. Once again, check out the Discord if you guys aren't in there, at the link in the description. Follow me on X, like the video, subscribe to the channel. I'll see you guys next week. Thanks, everyone. Bye-bye.